from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
In for Emily Chan, this is Bloomberg Technology. Coming up in the next hour, why Samsung chose Texas. The tech giant has chosen the Longhorn State to build a cutting-edge chip fabrication plant. But the development still isn't enough to impact the ongoing chip shortage. Plus, travel bookings are at a record. That's according to Experience's website, peak.com. We'll talk to the company's founder and get a look at what to expect ahead of next year. And we're taking a look at supply chain issues ahead of the holidays and if supply will be able to meet demand. We catch up with Shutterfly CEO Hilary Schneider on how they're staying ahead of the curve and predictions for holiday purchases. But first, we'll get to all of it in a moment. Let's get a look at the markets. Tech sector once again extending its losses. Kriti Gupta is in the house to talk why. Well, it's all about the yields again.
It's all about the yields, Caroline, which kind of taking its cue from oil. It's all really a big cross-asset picture. I'm going to walk you through it. Today's big news was the SPR release coming out from the Biden administration. 50 million barrels put on the market for oil in a way to kind of combat the inflationary pressures you're seeing in the oil prices. But the takeaway for the market was that this is a short-term solution. And that's why you're kind of seeing oil prices still kind of higher at the moment. A lot of that news priced in, and instead looking ahead into the demand after the SPR impact is felt. And that's really where you start to see yields creeping just a little bit higher. This idea that inflation is still persistent despite this short-term effect of the Biden administration. But it's that yield picture, how that translates to the bond market that's spooking tech. And that's where you saw the NASDAQ underperform. And that's more clear when you start to see profitless tech, not your big tech names, not your Apples, not your Microsofts, but those new tech companies that are still growth names. A lot of the EV space falls under this category. You can see just how sensitive it is to those yield spikes. So that's really your cross-asset picture, Caroline. I want to hit some of those tech subsectors, though, because I said tech underperformed. It really translated into your semiconductors, your SOX index, your Chinese ADRs, which is, of course, tech-heavy, and your NASDAQ Biotech Index. The sole outperformer today, Caroline, was, of course, your cryptocurrencies kind of doing their own thing, perhaps acting as a little bit of an inflation hedge. That's your macro story. Let's get to the micro with Ed Ludlow.
Yeah, I want to get straight to some earnings which dropped after the market closed, specifically some of the device makers or laptop PC makers, HP, Q, the ticker for HP Inc., and also Dell. You see what we're seeing, really strong demand for both companies from commercial customers, basically companies buying new PC infrastructure for their workforce as they return for the office. Particularly interesting in HP's case, you see that stock up almost 7% in after hours. It popped much greater. There was weakness in the consumer side of the business. Sales, they're down 3%. But what they're saying, some lines crossing from the call, HP seeing supply shortages constraining personal systems revenues for the foreseeable future. In the quarter, they were actually able to get more components than they thought, but the supply chain picture is not going away. It's not changing. And that's interesting when we go to retail, because if you look at Nordstrom, the reported after the bell, along with Gap, well, that is a completely different story. You see there, wow, look at those stocks and the downward move in after hours. Nordstrom down 21%, Gap down 15%. The story common between them, supply chain constraints. They've been really hammered by this. Gap going as far as to downgrade its full year sales growth by 10%. And, you know, the problem is that these aren't going away. They're also, of course, facing higher input costs. And the question for these guys into the holiday season, and it is the key holiday season, do they pass those higher input costs on to the consumer? These two in particular don't have that strong an e-commerce presence either, Caroline.
Well, keeping us abreast of all the cross-digital native and narrative that we currently have when it comes to some of the earnings. We thank you, Ed Ludlow, always keeping us smart on the latest earnings. Meanwhile, let's get you smart on the latest real estate moves. Samsung is said to have decided to build an advanced chip plant in Taylor, Texas. That's just outside of Austin. It's a win, of course, for the Biden administration, which wants greater semiconductor capacity right here on U.S. soil. Bloomberg Technology Executive Editor Tom Giles joins us now for an update on this story of they've already invested a ton in Austin already, right, Samsung? So what do they want to make in Taylor?
Yeah, well, they've already got a few thousand people there. They've already invested some $17 billion. We're looking at another big sum, $17 billion, another couple thousand people who might be employed there over the coming years. It's all about chip capacity, Caroline. It's all about making sure that the next time we have a big supply constraint, a big chip crisis like we've had over the last year and a half, that we're better prepared for it. And the way to do that is making sure that the major chip manufacturers like Samsung, like Intel, have the capacity that they need. And what you need to do for the future, you need to start now. And it's big investment, and it's a big time commitment as well. Yeah. And that's what Samsung is looking to do here.
Yeah, I mean, time commitment in terms of these things don't get built overnight. It'll be a few years until it comes online. But they also want to, I guess, gain market share compared to some of the competitors here in the US.
Yeah, there's a huge cutthroat competition going on among the major advanced chip manufacturers. You've got Samsung, Intel, as I mentioned, and don't forget TSMC based in Taiwan. Each of these players is really working for market share. They want to dominate the most advanced chips. They want to get out ahead of each other. Remember that we've talked a lot about how Intel was once the leader in the most advanced, the speediest, most powerful chips in the world, but they've fallen behind in the last couple of years. And what this does is it gives TSMC and Samsung an opportunity to sprint ahead and gain an advantage. And that's why you have the Biden administration and the folks in Texas being willing to have a foreign company expand here, because it's all about making sure that we don't run into the same bottlenecks that we're seeing right now that are disrupting our holiday shopping season.
You talk about the competition between the companies. Talk to us about the competition between the states as well, because TSMC, I think, is more in Arizona, right? Why did Texas manage to lock it in with Samsung?
Yeah, so Greg Abbott, the governor there, has really done an effective job at selling Texas as a business-friendly, low-tax, low-regulation environment. So we've seen lots of companies from Techland, Oracle, Tesla, to name a couple, HP, all moving or expanding there. And we've already got, Apple's already there, Samsung's already there. A lot of companies are already there. Texas has become an attractive place. The big question becomes, when you bring in these companies and you give them all these tax breaks, so you're cutting off your revenue streams for the next several years, do you have the capacity for, in terms of traffic, in terms of school, in terms of housing? And are you going to start to see some of the inequalities and some of the challenges that the Bay Area has seen replicate themselves in a place like Austin?
Keeping us smart on all of these decision-making processes at the moment. Tom Giles, we thank you, of Bloomberg News, as we see tech gravitate out of Silicon Valley a little bit more towards the state of Texas. Turning now, though, to a different company. We keep a close eye on Zoom. The pandemic-fueled rally seems to run its course. Shares of the company lower Tuesday as the video conferencing platform reported a smaller than expected number of large customers for a second straight quarter. Now, that's raising concerns about growth at a time when more and more workplaces and schools are actually reopening back up, finally, in a world where we hope COVID is tamed a little bit more. Let's bring in Bloomberg intelligence analyst Amin Bensaid to look at what is a big sell-off, like, 20% market value erosion over the last 5 days for Zoom. And in some parts of the numbers actually beat. So what was the real feel factor here?
I think the main issue there was the lack of major catalyst for growth for the next few years. Because we've seen in the last few months how, unfortunately, Zoom's merger with Five9 was terminated. That was seen as a negative because that was expected to be a growth catalyst for the next few years. So investors yesterday were waiting to hear more news about the company's strategy to reaccelerate growth, or at least moderate, growth in the next few years. But I don't think they heard that yesterday.
Do you anticipate that they could do it organically, or does it have to be inorganic? Do they have to buy something?
It depends on how fast they want to do it, right? If they want to do it organically, it's going to take a longer. M&A is going to get them faster. And I think investors were trying to see where Zoom was going to look at for possible M&A in order to accelerate that growth, through acquisitions.
Talk to us about the headwinds as well of, us working more in the office? How are they trying to get some of us to remain dedicated to the Zoom platform?
So I think from Zoom's perspective, they expect that the hybrid work is here to stay forever, right? So these dynamics that change temporarily are going to remain in the future. But I think they're trying to adapt to the enterprise's needs of the future. So those legacy items, that communication tools that we used to do in the past, that we're not going to be doing anymore, how we shift from that to the communication of the future. So I think that's going to be the focus, is can they answer this question efficiently for enterprises, and can they convince them to get them instead of a Microsoft or Cisco's WebEx or even RingCentral?
It's kind of a bit of a perfect storm for a company like Zoom at the moment, as in not only do they have their own growth story that perhaps isn't living up to expectations, but we're also getting a bit negative on growth stocks in general, because we're worried about where the central bank goes, and perhaps they have some headwinds in terms of their share price in that respect. How do you think Zoom, as a set of executives, have managed the narrative, which perhaps Peloton, for example, has completely failed at, in terms of everyone getting incredibly bullish on these sorts of stocks, and then they just cannot live up to the overall euphoria that's built into the stock price?
So I think, to answer your question more directly, I think the merger that they announced for Five9 in the last months, I think that was actually a positive. But that showcased how this company is already thinking about the future and how to accelerate the growth. But fortunately, as I mentioned, since that fell through, investors were looking for what's new or what other things they can do to, reboost their top line expansion. They haven't heard that in, last night, and I think that's why you see the market reaction that we've seen, today.
Bit brutal. Bloomberg intelligence analyst. I mean, Ben Said, great to have you with your expertise on Zoom, and make sure you want to tune in tomorrow, because, well, we've got the perfect person to be discussing all of this. Zoom CFO is joining us, Kelly Steckelberg. You don't want to miss it. Meanwhile, coming up, the future is digital, and when it comes with new challenges, you've got to talk about how data visualization software company Tableau is looking to train a workforce to tackle that digital future. This is Bloomberg. So the world, as we know, is becoming more and more digital, a trend that was only accelerated by the pandemic. And it's impacting the workplace. Beyond Zoom calls, employers are increasingly in need of people actually with the digital skills to keep us with this changing business landscape. So how can we prepare the actual workforce for tomorrow? Tableau CEO Mark Nelson been working on just that, making a key announcement: 10 million data learners in just 5 years. How do you do it?
Yeah. Well, it's by doubling down on a bunch of efforts that we've already had, including Tableau Academic, where we enable learners around the world, academics, to get licenses and software and programs to help them learn data. It's working with partners like PathStream, who can help spread education across a variety of channels. Because as you just mentioned, the world is becoming more and more digital, and it's so important that data, working with data, becomes a skill that everyone has. It used to be a job that just kind of a privileged few would work with. Now it's just a skill that you need in your job every day, and employers are looking for. And there's a big gap out there right now, which is why we've made this commitment to train 10 million people.
I mean, digital skills, it's quite monolithic in many ways. I mean, what exactly are people wanting right now within the workforce?
Yeah, it's that ability to see and understand data, right? Whatever it is, whatever your business is, and even your daily life, as you said, more of that's becoming digital, and that means there's data that helps you describe it. And I like to say it's like a new telescope or a new microscope that literally helps you see the world in a new and more powerful way. And so employers are really looking for people who have those skills, because employers want to be data-driven. In recent research, 83% of organizational leaders are looking for their organizations to be data-driven, and yet only about a third of their employees are comfortable working with data. This is why data skills, among the basic digital skills, that ability to work with data is at the top of everyone's hiring list right now.
At what point, what age group are you tackling? Were you looking at? I mean, we obviously need to reskill a current workforce, but are people being educated on it as they come through education and university schools at the moment?
Yeah, all of the above, right? Like you want to certainly train your existing employee base who already know the business, but this is becoming just an important life skill, right? Like, and it's not just about work, it's just understanding the world around you as the last 2 years have shown as we go through the pandemic, right? We're all dealing with numbers. We're dealing with numbers around infection rates and vaccination rates and all kinds of other numbers. And so, yeah, getting this as a basic skill in schools, which again is where our Tableau academic program has been focused on teaching elementary school, high school kids, college kids, how to work with data, what those skills are so they can understand the world as I think it's going to be, as well as the business workplace.
How does Tableau, how do you meet the workers where they are? We've had, of course, again, day in, day out, we're discussing the Great Resignation, people not returning to the workforce, older people, women, people of color, not the participation rates we're used to. Are you talking to people looking at educating those in digital that are previously in services sectors? How are you sort of meeting them where they are?
Yeah, for sure. And first, it's because data affects everything, right? Like it doesn't matter what your skills are or what you want to be in. Data is important for that job and for that area. And then it is getting through all of these channels, be you an academic, be you pastoring, be you looking for a second career. And we're also very focused on making sure that this is equitable, right? So we also announced, in addition to the 10 million, a $5 million grant through our Tableau Foundation that is specifically geared towards teaching women and girls around data skills. So it takes a broad approach to get to 10 million people.
And when they've done your training, are they more confident in manipulating data?
For sure. Like the hallmark of these skills is that you're comfortable working with data, really making data-driven decisions, right? You're not intimidated by going, gathering, putting data together. It just becomes, again, this tool in your toolkit. And it is that combination of the human intellect and the ability to work with data that makes us all more powerful. Data is not that answer. It's a tool for humans to do their jobs even better and to be more data-driven.
And dare I say, this sounds altruistic in and of itself, but how does it help Tableau longer term?
Well, certainly our vision here is to help people see and understand data. Like it's just our core belief that everyone should be working with data. And we certainly provide our tools as part of that. But this is just a core belief that you can do so much good and be so much more effective if you are data driven.
And how is business confidence at the moment? How is the desire to be using your product, to be getting out there and evolving themselves, the companies?
Yeah, more pressing than ever, right? Like if you've seen the changes that happened to every business over the last 2 years, they've had to react and adapt their businesses as they go forward. And the key to doing that is data and being able to really understand. If you look at companies like Jaguar Land Rover, who is really reinventing their company and using data by getting data in the hands of everyone, from manufacturing to the stores, all the way across the entire chain of what Jaguar Land Rover does, and empowering all of that with data is the key to really adapting with the changing rate of business.
Important to have in the supply chain constrained world that we currently live in. Tableau CEO Mark Nelson, great to have some time with you. We thank you for keeping us up to speed on the world of data. Meanwhile, in other news, the most valuable startup in the United States has no immediate plans to go public. John Collison, of course, is the president and co-founder of digital payments company Stripe, says he's happy for it to stay private for the time being. Speaking at a conference in Abu Dhabi, Collison said that they are still very early in Stripe's journey. The company raised $600 million, remember, in March, was valued at a cool $95 billion. Stripe competes with Square and PayPal, among others. Meanwhile, coming up, billionaire philanthropy. We'll take a look at Jack Dorsey's donations pattern, how his celebrity network is benefiting from it. That's next. And as we head to break, let's take a look at some other key tech earnings we got after the bell. Cloud computing company VMware reported third quarter revenue that beat analyst estimates. Shares see a little changed, but Autodesk feeling the pain. Big declines after the software company narrowed its full year outlook. We'll continue to watch it. This is Bloomberg. Tech titan Jack Dorsey started giving away billions to charities in an unconventional way, citing he wants to bring transparency to the process and avoid bureaucratic deadweight. The thing is, his money is going disproportionately actually to Hollywood charities, which are connected to some of the most famous people on the planet, many of whom have a pretty personal relationship with Dorsey. Let's talk more about all of this at Bloomberg's Sophie Alexander. So, I mean, all I care about is Jay-Z. I'm fully upfront about that across my Twitter. And is these the sort of celebrities that he's currently sort of working in partnership with, not only in actually companies that bring money, but also philanthropic endeavors?
Right. So we know that Tidal was acquired by Square recently, and Jay-Z got a spot on the board. But that comes after Jack Dorsey gave Jay-Z money to his foundation, the Sean Carter Foundation. So there's a lot of overlap here. And we also know that Jack was spotted on a yacht with Jay-Z and Beyonce. So there's some social element there, too. So there's a lot of crossover in all of this.
Talk to us if the transparency is kind of what hurts here. I mean, here is a man who, you know, many of us give money to charity because we form a relationship with said charity from a personal perspective, because it helps, you know, help a family member with something that we're focused upon, or we see another loved one really focused upon that particular endeavor. Is it not sort of natural that perhaps he would give money away to philanthropic endeavors that he sort of knows?
Yeah, no, that totally makes sense. I mean, but the problem is the scale here. We're talking about Jack Dorsey, who committed $1 billion last year, and that $1 billion has ballooned to about $4.5 billion. He has about 3.5 left to give with what he's given already, and you know the pace of Square shares and when he sold them. But we're talking billions of dollars, and so the scrutiny and like the ask for transparency goes to billionaires more because there's a lot more at stake.
I'm interested, Sophie, as to whether there is any transparency as to what his rhyme or reason is to go into certain of the charities. Yes, they might be helmed or endorsed by some sort of celebrity, but does he have an MO as to what he's trying to give for?
Yes, he said that he wants to give to girls' education and health, UBI, and of course, foremost, COVID, because he started this in April of 2020, about a month into lockdown in San Francisco. So that's where a lot of the money has gone. And for example, one of the organizations that he gave to is tied to Sean Penn, and they got $30 million last year. And they used that money to open COVID testing sites all over the country. So there is some overlap here, and it's not just that he's giving to celebrity charities that have nothing to do with what he said he's going to give, but that is sort of the case in some of these places.
Well, thanks for bringing us transparency to that gift giving. Sophie Alexander, great to have some time with you. It was a Bloomberg Big Take. Go check it out on the website and the terminal. Meanwhile, coming up, from axe throwing to cooking classes and wine tours. Sounds pretty good, huh? Travel is seeing a recovery as we want to go out and take vacations. The holidays are approaching, remember. Maybe some of those pandemic restrictions easing, at least in the United States. But talk to the founder and CEO of online booking platform Peak.com. This is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde in New York. Now, let's get back to the markets. Ed Ludlow, it's very fitting to be talking about travel as you're currently across the pond from us. And I'm very pleased to say successfully got your visa stamped.
Very successful. And the thing is that I came because the borders were reopened, right? And it's interesting, there's so much in the news flow about the lockdowns in Europe right now that US officials on Tuesday felt they had to comment. And US officials basically said, we won't see the same lockdowns in the United States that we saw in Europe. But look at the screen. Interesting. Airbnb a little softer, 2% on Tuesday. Booking Holdings and Expedia seeing some gains, some green on the screen, and there is data out there to suggest that bookings are strong. But airlines not really feeling the same love of late. If you look at the S&P 500 relative to the specific gauge of airlines, it actually started the year so brightly when the world was reopening and travel was starting to come back up again. We've seen actually some pressure on those airline stocks recently. If you look at that index, even though transborder travel has reopened, international travel, but there's somebody I want to remind you of, Caroline. You'll know this name very well. Ryanair Holdings CEO Michael O'Leary. I know you know this name, and here's what he had to say on Tuesday about the lockdowns in Europe and his fears about what this means for travel. He said it's inevitable that will undermine confidence between now and Christmas because of the lockdowns, and that's not just going to disrupt Christmas, but he goes on to say it's going to impact people because it's Christmas time when you normally book your summer vacation. So I thought that was really interesting psychology. This is definitely a space to watch going forward. If we do see lockdowns in Europe deepen and we see something similar here in the United States, will we get this kind of big resurgence in travel we thought we'd get?
Here's hoping that we indeed do manage to stay on track. Ed, we thank you so much. And I mean, we're just talking about the pressure on airline stocks. We're talking about airports, though, getting busier again, particularly here in the US. And as opposed to this time last year, remember, pandemic restrictions, second COVID wave took travel by, really by the jugular. And the numbers through US airports were rising ahead of the holidays. And experience booking platform Petecom says travel is set to make a huge comeback in 2022. Let's get optimistic again. Let's do it with yet another British voice. It's a British takeover today, people. Rizwana Bashir is here with us. She is the founder and CEO of Pete.com, which empowers businesses with the tools they need to secure bookings. It's tripled business, even during the pandemic. Rizwana, talk to us about how during the pandemic, we all wanted online experiences as well as in real life.
Yes, so with Peak, we help people book experiences. And I think one thing that's an interesting part of that is that we help people find fun things to do locally as well as online. And so despite lockdowns, one of the things we realized is that people started finding fun things to do close to home. So that might be taking your kids apple picking. It might be taking renting a boat with your family. And so, what we were able to see was that there was still local demand. About 70% of the bookings that we were finding people doing were happening locally. And we also saw that there was a big demand for software. There was a need for digitization in this space. So, tours and activities businesses have not been the quickest to be able to digitize and use online booking tools and a lot of stuff on site to be able to help people. And one of the things that we saw was, we actually provide software for these merchants, and there was a huge adoption there. So part of the reason we were able to grow so much is because we saw that there was a 10-year leap forward on digitization of these offline industries.
We're looking at the numbers, about $2 billion in experiences booked thus far, 38 million customers served. I mean, during lockdown, I've done cocktail making. I've cooked Thai with someone in Thailand. I've done wine tasting. I've gone into New York and done donut tasting. You name it, I've booked an experience. And people can see the growth, and people are investing in your growth. Just talk to us, Rizwana, about the money that you've been building. I think $80 million just raised.
Yes, so we today just announced an $80 million investment coming from Westcap and Goldman Sachs into our business. And, we were in the fortunate position of being a business that, despite some of the challenges of the travel space, we've been growing very fast, we're profitable. And so we had a lot of folks that wanted to be in a position to invest in the business. And we chose those partners because of their expertise on travel. So with Westcap, Lawrence Tosi, who started and runs that fund, used to be CFO of Airbnb, and has a lot of experience with investing in other travel businesses like Hopper and Sonder. And then obviously Goldman bringing a ton of fintech experience for us. And, we've done nearly $2 billion of experiences. We are the payments layer for thousands of businesses. And so it was important for us to bring those two partners together and choose them as the investors in this round.
It's fascinating that you brought LT from the former CFO of Airbnb on, because as an advisor, I immediately think of competition, and Airbnb must be it. What is it that Lawrence is seeing in your business that isn't in some way a rival to Airbnb, or won't be in some way sort of overtaken by Airbnb as a key competitive threat?
Yeah, so we really focus on the experiences space, which is a very, very large segment. And, our core primary value proposition for businesses is to help them digitize and get online, a little bit like Shopify for experiences. So we provide the merchants with all-inclusive technology. So if you're a business that's a mom and pop shop doing parasailing, all the way through to a museum of ice cream or a color factory, or someone seeing 1 million visitors a year, we provide the underlying technology to help you do online bookings, to manage everybody who comes to see you on site, to manage your employees, to do everything that you need on marketing. And so actually, our primary proposition is being that infrastructure layer, that technology layer to help these merchants to digitize. And so, some of those businesses will list on something like Airbnb and anything else, and we allow them to do that. So you can kind of think of us as being quite complementary in that sense. So, we're providing that underlying infrastructure layer, and then we have a marketplace just like Airbnb, but our businesses are free to be on multiple places. I think one thing that we've realized is that this is a space where businesses aren't getting enough help to get bookings. And so, the major marketplaces like Airbnb and some of the other big travel companies you've probably heard of drive less than 5% of the bookings through our platform. And so what we really see is these businesses are still having to do the heavy lifting themselves, which is why having these great technology tools and having their own ability to be able to do great marketing has become so important.
That's a fascinating stat, the 5% one. So where are the bulk of people coming to these experiences from? Is it usually through Google, or is it through word of mouth? How are they finding out? Or is it through Petek.com?
Yeah, so it's a mixture of those. I would say it depends on the business, but I think we're seeing a huge amount of the heavy lifting happening with the merchants. They're doing their own work to be able to drive customers, right? And one important part of that is obviously, giving customers a great customer experience. One of the things that we've done is we've collected about 2 million verified reviews across our platform, about 4.8 stars. And one of the things that happens is the merchants that have those best reviews are the ones that then have the most folks coming because of word of mouth, because of people discovering them online. And so I think that what we see is, the vast majority come through the merchant's own website. And then there are small local providers. It's the small local tour agency. It's the small hotel. And so it's a little bit more fragmented in this space. And it means that these businesses do really need to have a great grasp and great technology to be able to manage all those channels.
Talk to us about the 80 million that you've raised and where you want to put it to work. Are you feeling growth mode upon you as we enter the vacation and holiday season? And where do you need to invest most in your business?
Well, first and foremost, we're tripling our team. One thing that we've realized is that, we want to make sure that we're in a position to make the most of this travel comeback. As you mentioned, next year, consumers are saying that they want to travel again. We've already seen, for our business, there was a big drop off in the early part of COVID, but things came back in a strong way. And so we're focused on that. We're going to focus on our businesses, merchants that we work with. We did that during COVID. We helped merchants get access to $30 million of loans. We gave them really valuable contactless payment technology. We did all of this stuff that was focused on them. And I think a core part of what we do is kind of being innovative, right? Building products and technology that the merchants need. So we'll continue to do that. We'll expand our product. We're seeing that businesses that see millions of customers a year really need our tooling, and so we'll continue to serve those. And we're also going to be expanding and into new areas. One thing that you mentioned is how many virtual experiences you did, right? How many things that you did in order to probably bond with your team. And I think as we go into a more remote working environment, one thing that we've consistently heard from large companies is we still need ways for people to build personal connections. We need ways for people to have trust. You're not going to have great companies unless the people within them are happy and have great relationships. And so we're investing in team experiences, in offsites and things like that, because we're seeing a lot of demand. We're already working with folks from Google and Netflix and Spotify who want help there. And so, you can see us expanding and doubling down on our core, which is those core experiences, fun things to do locally or when you're traveling with friends and family, but also starting to focus on the corporate side as well.
Long live the escape room. Rizwana Bashir,
Indeed.
we thank you so much. Petek.com founder, CEO, congratulations on the new funding round. Meanwhile, let's talk about Jeff Bezos. Blue Origin has announced, who will be on board its next trip to the edge of space. Passengers on December the 9th flight will include Good Morning America co-anchor and former New York Giant star Michael Strahan. He will be joined by Laura Shepard Shirley, eldest daughter of Alan Shepard, who became the first American in space in 1951. The flight will be the 19th for Blue Origin. Coming up, bridging the funding gap, we talk constantly about the need to invest in women and diverse-led companies. I'm just talking to female-led business there at Petek.com. Next guest is helping to do more of that, which is Morgan Stanley's Next Level Fund and its push for more inclusive investing. That's next. This is Bloomberg. It's one of the most dramatic flexible working policies yet from a financial firm. The UK fintech company Atom Bank has moved to a 4-day work week. Employees will see their time at work cut by 3.5 hours to 34 hours a week. With no change in salary, Adam Bank was the UK's first mobile-based lender. Here in the United States, banking giant Morgan Stanley just announced its inaugural investment for its Next Level Fund, which invests in women and multicultural founded startups. And the company co-led Series A funding for Cohesion. It's a company that focuses on, well, turning commercial buildings into smart ones, making them more green, more autonomous. Joining us now, Alice Vilmer. She's the co-portfolio manager for Morgan Stanley Next Level Fund. And first and foremost, I mean, great to be able to put your first paycheck to work. Like, talk to us about Cohesion. What attracted you to this business?
We were attracted to Cohesion, and hi Caroline, nice to see you again. We were attracted to Cohesion because of the opportunity that stood for it to accelerate its growth through the partnership with the Next Level Fund and our LPs, Hearst, Walmart, and Microsoft, in addition to Morgan Stanley. And the premise around prop tech and helping buildings become more sustainable by incorporating technology to help them maintain and optimize their inner workings was very, very interesting and exciting for us.
Talk to us about, how you're currently sourcing the opportunities, because I speak to many a diversity-focused fund who's saying, look, we do not want for pipeline at the moment. We are overwhelmed with pipeline. Where do you source some of the most interesting deals?
Our deals come from, again, that pipeline is very strong. They come from Morgan Stanley, our internal colleagues and networks. We also speak with later stage growth funds and VCs who are investing at the very early stage where we're investing, which is Series A+. We also speak with affinity groups. We also have our Multicultural Innovation Lab, which we've been able to meet a lot of excellent entrepreneurs who are diverse and women. And so that keeps our pipeline strong as well. So over the last 5 years, we have been very successful in keeping and maintaining relationships with founders of color and women, such that it wasn't hard for us to begin to pull our pipeline together for the Next Level Fund.
Alice, it's interesting because, of course, you cut them a check for the likes of Cohesion, but actually, you can strategically use them as Morgan Stanley looking at the real estate. Is that going to be an overall narrative that you feel with the fund, that you'll be able to support them in all sorts of different ways, as a customer, as an investor, as an advisor?
Yes, we believe with the Next Level Fund, Caroline, that cash is really the commodity. And the real opportunity here is to help these businesses accelerate themselves through the ability for our investors to be more active, to be able to find commercial opportunities internally and externally to really help propel the acceleration of these businesses.
I like that you turn a phrase, cash is the commodity, and it is at the moment, Alice. Or, you will over at Morgan Stanley be talking about all the time, I am all the time, in terms of we're awash with cash, the amount of money that is trying to find a home, and that's why we're seeing all these more alternative investments. It is also driving up valuations, public market and private market. How are you finding the valuations of these Series A? Does it filter down as that far that you're seeing them become more elevated?
Yes, Caroline, we've seen all of the filtering of the money that has come into this space, including the addition of several funds that are at the seed stage and very early Series A stage by your more established VC firms, such as Greystone and Sequoia, who are opening up these earlier stage funds as well. So there's more competition into the space. Valuations have continued to increase. And so getting a glimpse into some of these companies at their very earliest stages allows you to stay in the game, if you will, moving forward. And so we are experiencing that as well.
Of course, it's one thing to be a female or diverse founded company. How are you supporting these businesses to remain that in their ethics, in the way in which they hire, and the way in which they build, ensure that they have diverse boards? How do these companies end up being that, walking the walk throughout their life cycle?
It's an excellent question, and one that is something that our founders think a lot about at the very outset of their companies. Because they are diverse, they are also very keen to making sure that their companies remain that way as they continue to grow. From a talent perspective, their hiring practices tend to be a little bit more blind, if you will, to make sure that they're getting the right talent, but keep their teams diverse. And from a board perspective, they now have the ability to be a bit more selective around who's going to be on the board. We're lucky in this respect, or fortunate in this respect, retrospect with our investment in Cohesion, I will be on the board of that company. And so we're already beginning to diversify that company's board. But the founding team through Shiva Kumar, who we've gotten to know, her co-founder, Nick Patel, they have a very diverse team in addition, which reflects their diversity as well.
Of course, in many ways, I'm sure the very existence of Next Level Fund within Morgan Stanley makes it attractive to talent wanting to join your bank, more diverse talent at least.
We would see that. We have a lot of interest, not only more diverse talent, but even mainstream talent or talent who's less diverse, but are interested in having more of an impact, supporting theses such as ours, closing funding gaps, and being part of the overall, if you will, ESG strategy and push for impact. We're seeing that across the firm internally as well.
Alice Vilma, so great to catch up with you. Thank you for bringing us the news on your latest and your first check being cut by the Next Level Fund, of course, on Morgan Stanley. Meanwhile, name a problem with the supply chain, and chances are that the twin ports of Los Angeles and Long Beach are suffering from it. Ships that make the 2 to 3 week voyage across the Pacific have to spend that much time waiting in line in Southern California to unload their cargoes. The time it takes for goods originating in Shanghai to reach their destinations through the ports has more than doubled to 62 days about 2 years ago. Go check out that story on Bloomberg.com. It's a fascinating read. Meanwhile, after the break, we'll hear from the CEO of one of the companies that's confident that actually the supply chain issues won't put a dampener on their holidays. Shutterfly CEO Hilary Schneider. I managed to speak with her a little bit earlier and talking of spreading the holiday cheer, no matter what. This is Bloomberg.
Apple is pushing to introduce its first electric car as early as 2025, looking to take on Tesla, Waymo, and others in the self-driving car space. Like it did with the first iPhone, iPad, and so many other new categories, Apple's aiming to throw away the existing definitions of a car and really build something from scratch. The goal? A vehicle that is a fully self-driving machine that lacks a traditional steering wheel and pedals and includes an all-new type of interior that's fully optimized for a completely autonomous driving experience. Under new car chief Kevin Lynch, Apple's accelerating development, but this shift does come after about 7 years of false starts, layoffs, and management departures from the company's special projects group running the car team. Pulling off a launch by 2025 will be tough for both technological and regulatory reasons, but the target does give Apple engineers a clear goal and motivation to pull off one of the toughest challenges in the technology industry at some point later this decade. Will Apple pull this off and revolutionize the car like it did the phone, the watch, headphones? Only time will tell, but I'm very excited to find out. I'm Mark Gurman. This is Power On.
And don't forget, you can subscribe to Mark's weekly Power On newsletter at Bloomberg.com. Supply chain issues. Well, they may be leaving many companies worried ahead of the holidays, but not Shutterfly. It's a company that uses your photos to personalize gifts, to personalize cards. And CEO Hilary Schneider says she isn't too worried about meeting demand, despite consumers continuing to prefer physical goods over digital. I spoke to myself as well as Taylor Riggs a little bit earlier. Take a listen.
I think there's actually a fallacy in the way people think about digital versus physical goods, in that there's a use case for both. And almost the more digital content you have, the more need there is to have a physical representation or keepsake that you keep in your home. So just to give you a frame of reference, this holiday season, in addition to the cards, we'll produce about 10.5 million books, about 3 million calendars, about 9 million gifting orders, of which about 2 million will be in ornaments that people have personalized for their celebrations. So it's interesting just to see the demand for personalized good. Another big trend we're seeing, we recently purchased Spoonflower, which is an open marketplace for artists to design fabrics and wallpaper. And wallpaper is up triple digit. And Spoonflower had its biggest revenue month ever in home decor in November.
I am curious, given the supply chain shortage and the paper shortage we've been talking about, what % increase have you seen in your input costs, and what % increase are you charging your consumers now?
Yeah, it's been interesting because of the scale at which we operate. We were able to lock in our supply chain commitments on paper in particular, and most of our other supply chain items early. And we have them in place. And we've been able to absorb the increase in pricing from a cost of goods sold by offsetting it with efficiency. So we are not seeing a dramatic increase on consumer pricing.
Talk to us a little bit about your people as well and the labor shortages we've been reporting on. How is that as you beef up towards the holiday season, and I'm sure perhaps want to take on some more labor?
Yes, so the labor issues are very real. There's more demand than there is supply of qualified personnel, and so we're getting creative. Definitely labor rates are going up, and we're thinking about how to incent our labor and then how to be more efficient in terms of how we staff and how we manage through this huge peak of demand that we see at this time of year.
Shutterfly CEO Hilary Schneider there. That does it for this edition of Bloomberg Technology. Do make sure you tune in tomorrow when we're going to be joined by the Zoom CFO, Kelly Steckelberg, Cybereason CEO, Lior Div, and John Wu, Ava Labs president. So much to be getting our teeth stuck into as we continue to see the NASDAQ, some of the tech stocks under pressure on the day. We continue to see if that's going to be the ongoing narrative tomorrow. With, of course, yields on the higher side, we continue to wonder the direction of interest rates, and that, of course, putting some growth into question, growth stocks into question and their valuations. But here on Bloomberg Technology, we continue to dive into some of the micro-level data. So stick with us for the deep dive on Zoom's earnings, for example. I'm Caroline Hyde in New York. This is Bloomberg.